Hello, it's Gene Tunney here. Today I'd like to talk to you about what's been happening with the Australian dollar. This is something that is obviously of great interest to people in Australia as it affects the price of goods we buy from overseas. Historically, we've been concerned about it because we may have been planning a holiday overseas. Unfortunately, the prospect of having a holiday overseas is not great at the moment given the coronavirus. It may be a long time before we can think about that. Okay, let's have a look at what's been happening with the Australian dollar. We see that it really plummeted in March. It fell to around 55 US cents. But since then, it's climbed back up to around 70 US cents. Michael Knox, who is chief economist at Morgans, which is a major Australian wealth management firm headquartered in Brisbane at the Riverside Centre, Michael wrote a really great note a couple of weeks ago. Why is the Australian dollar so strong? And Michael explains how the recent movements we've seen in the Australian dollar, how it's what we would have expected from the theory of floating exchange rates. So the Australian dollar is a floating currency. It's determined by supply and demand in the foreign exchange market. One reason that people want Australian dollars, so in addition to wanting Australian dollars because you might want to pay for goods exported from Australia, one reason is that you might want to invest in Australia. You might want to buy Australian government bonds, for example. So Australian government bonds would be in demand from financial institutions, so from central banks, from pension funds, from hedge funds overseas. And therefore, the interest rate or the yield on Australian government bonds relative to the yield on US government bonds will be an important factor determining the exchange rate. So this is the point Michael makes. Before we get to that, I might just talk a little bit about what was behind that big plunge in the Australian dollar in March. That had to do with an increase in fear in the global economy associated with the coronavirus. We saw that the fear index, the measure of the expected volatility in the markets over the next month, that increased sharply. It went up to levels not seen since the financial crisis in 2008, back in March. And it's only come down since then because there was an important intervention in March by Jay Powell, the chair of the Federal Reserve Bank in the US, where Powell effectively said he would do whatever it takes to protect the US and hence the global economy. So that intervention by the US Federal Reserve has been seen as critical, and the federal funds rate has dropped to around zero We've seen that the Australian government, or the cash rate that the Reserve Bank of Australia manipulates, that's been cut to 0.25%. What's happened since March is a fundamental change in the difference between Australian and US interest rates. And this has affected the Australian dollar. What we saw is that with the aggressive monetary policy actions in the US interest rates are now below those in Australia. What I've got there is a chart of the yield on 10-year government bonds for both Australia and the US. And we see that prior to the last few months, the US 10-year bond rate was above the Australian government bond rate, but that's now changed. So we might go over to Michael's note, why is the Australian dollar so strong? I will link to this in the show notes so you can read it for yourself. Michael has written that the effective Fed funds rate, so the effective federal funds rate, fell from 2.4% at the end of July 2019 to 0.05% in March 2020. It has remained at that level ever since. The result was that US 10-year bond yields fell dramatically from 2.015% at the end of July 2019 to 0.659% at the end of March 2020. This was a decline of 1.36%. Australian 10-year bond yields fell from a level of 1.184% at the end of July 2019 to 0.758% at the end of March 2020. This was a decline of 0.3%. I've switched the chart to one that is a closer look at what's happened with those bond yields over this year. So you can see what's happened and just the extent of that gap that's opened up. So the fact that Australian bonds are yielding significantly more than US bonds at the moment. So I'll continue with Michael's note. Importantly, US bond yields had fallen by 0.93% relative to Australian 10-year bonds. This big move in relative interest rates in favour of the Australian dollar set up the rally that was to follow. As a result of this dramatic cut in US interest rates, the Australian dollar began to rise. Over the next month, Australian 10-year bond yields rose further and US 10-year bond yields fell further. Australian 10-year bond yields rose by 0.14% to 0.89%. US 10-year bond yields fell slightly to 0.64%. This is the important point, which I've illustrated with this chart here. The important point is that this meant that Australian 10-year bond yields had risen by 1.08% relative to US bond yields since the end of July 2019. Michael writes, this led to the rise in the Australian dollar this led the rise in the Australian dollar to accelerate. This larger difference between the bond yields was the final factor driving the Aussie dollar up to US 70.65 cents. Since that time, the difference in bond yields has declined slightly, and so has the level of the Australian dollar. Okay. Now, Michael's model predicts that the Australian dollar is pretty much at its fair value level now, which back a couple of weeks ago when he he did the modelling was around US 69 cents. So that's practically where it is now. So based on that model, we would expect the dollar to remain around that level. Of course, you can't take anything for granted in the macro economy, and definitely not at this time of coronavirus. And a lot's going to depend, in my view, on what happens with the US and what that would mean for perceptions of fear in the global economy. And given how crazy financial markets can be at times, it could be you have a situation whereby the amount of fear increases, we see that fear index spike up again, and then the financial market players freak out and they don't want to hold something perceived as risky like the Australian dollar, and they sell it off or short it, and then our dollar falls in value. So that's something that very possibly could happen. So let's wait and see how things develop. I thoroughly recommend you have a look at Michael's note, which I will link to in the show notes. Why is the Australian dollar so strong? I think it's a really great explanation of what's happened with the Australian dollar recently, and it demonstrates how a really top-flight market economist such as Michael Knox looks at the exchange rate. Okay, thanks for joining me. I hope you found that useful, and look forward to chatting with you again sometime. Thank you.